You're listening to AI Prism from Seoul Economic Daily.
It's Wednesday, May 13. I'd like to share some thoughts about finance daily.
Glad to be here.
So if you look at the Korean financial sector right now, the primary mission seems to be aggressively clearing out legacy bottlenecks.
Oh, absolutely. Across the board.
Right. And they're trying to force digital and financial modernization by essentially breaking down everything from old paper health records to literally 20-year-old debt.
Yeah, it's a massive push.
Which brings me to this analogy. Imagine you build the state-of-the-art $85 million digital highway, but the toll booth operators just flat out refuse to lift the gate.
Right. Nobody can drive on it. And that is exactly what's happening with Seoul 24 right now.
The government's new paperless insurance claim system.
Exactly. The insurers dropped about 118.4 billion won. So roughly 85 million USD just building this thing.
Wow.
And they're spending another 24.27 billion won, or 17 million USD, annually just to operate it. But 6 months in, the connection rate is sitting at a really dismal 29%.
Because the EMR vendors, the electronic medical record companies acting as gatekeepers at these local clinics, are basically refusing to cooperate, right?
Yep. They hold the keys to the data pipelines, and they've been incredibly stubborn.
But the regulators are finally getting involved. I mean, the Financial Services Commission Vice Chairman Kwon Dae-young stepped in and called the delay highly abnormal.
Highly abnormal, yeah. He even threatened an antitrust probe.
Which is a pretty heavy stick to swing.
It is, and it worked, mostly. GC Media, the top vendor, is finally joining, which should bump the expected connection rate up to about 52%.
But there are still holdouts, right? Like Aegis Healthcare and BitComputer.
Oh, yeah. And together, those holdouts still control 27% of the clinic market. So it's an ongoing power struggle.
Well, speaking of regulators breaking through legacy tech bottlenecks, they are also forcing banks to clear out actual physical legacy financial liabilities.
You're talking about the 2003 credit card crisis debt.
Exactly. I mean, there is a private bad bank called Sangnoksu that still holds about 700 billion won or 500 million USD in delinquent debt.
And that's spread out across something like 90,000 borrowers from over 20 years ago.
Right. Shinhan Card alone still has 240 billion won, roughly 173 million USD left on the books. But now you see major players like Hana, KB Kookmin, and IBK finally rushing to exit.
They're offloading it all to KAMCO.
The Korea Asset Management Corporation.
Right, which is basically the equivalent of the U.S. Resolution Trust Corps. They absorb these toxic assets so the banks can finally wash their hands of it.
The Worry Bank is apparently still reviewing its options. But I have to ask, how does holding on to 20-year-old consumer debt impact a modern bank's reputational standing with foreign investors?
Oh, it's terrible. I mean, if you're a foreign investor looking for a clean, modern institution, you don't want to see a mess from 2003 still lingering on the balance sheet.
Especially when it's becoming politically toxic. Political leader Lee Jae-myung actually tweeted recently that this collection is primitive predatory finance.
Yeah, the pressure is immense. But notice what the banks are doing at the same exact time. While they're shedding this ancient consumer debt, they are fiercely battling to lock in massive, stable, institutional deposits.
Right, to secure a modern funding base.
Exactly.
And Shinhan Bank really showed their hand there. They just secured Seoul's municipal treasury all the way through 2030.
Which makes it a 12-year streak for them.
Yeah, and just to put this into perspective, winning the Seoul treasury is basically like a bank securing the ultimate risk-free financial anchor tenant. We are talking about a 51 trillion won treasury, so roughly 37 billion USD.
It's massive.
The primary account alone manages 47 trillion won hot, or 34 billion USD, plus another 4 to 5 trillion won, about 2.9 to 3.6 billion USD in the secondary account.
But they definitely paid a premium for that anchor tenant. Shinhan offered a 3.45% rate.
Right, which is huge. I mean, for context, Busan's rate is only 2.46%.
Shinhan saw an opening, Seoul recently increased the waiting for demand deposit interest rates in their evaluations, and Shinhan capitalized on it perfectly.
Leaving Worry Bank to lose the bid for the third consecutive time.
Ouch, yeah.
So the traditional banks are busy fighting over these giant municipal treasuries. But if we pivot and look at everyday consumer transactions, the fintechs are basically just rewriting the rules entirely.
Oh, Kakao Pay is a great example of that. They're aggressively pushing for 10 million offline monthly users next year.
Because they want to surpass Hyundai Card and crack the top four,
right?
Behind Shinhan, Samsung, and KB Kookmin.
Right. And to do it, they partnered with Samsung Pay and Zero Pay, which instantly added 3 million new acceptance points for them.
Now, Zero Pay is that government-backed QR payment system, right?
Exactly. Plus, Kakao Pay is the only Korean fintech in the Global by 402 Foundation, so they're positioning themselves everywhere.
But let me push back on that for a second.
Right.
Is a fintech utilizing a government system like Zero Pay essentially just a Trojan horse to bypass the traditional credit card networks?
Oh, I mean, without a doubt. Traditional cards rely on this very heavy legacy infrastructure. Physical terminals, swipe fees, middlemen.
The old toll booths.
Exactly. By using Zero Pay's QR codes, Kakao Pay completely bypasses all of that. They create a direct, significantly cheaper loop between the user's bank and the merchant.
Wow. So they're just stepping around the bottlenecks entirely.
Yeah, exactly.
Well, that leaves a pretty provocative question for you to consider. As Korea's financial hierarchy gets completely reshaped, what's ultimately going to be the stronger catalyst? Is it going to be these heavy-handed government mandates forcing modernization, or will the ruthless pressure of fintech market innovation just pull the industry forward anyway?
That's a great question.
That's today's AI Prism Finance Daily. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a IFRA award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.